Anyone? Well, welcome to the live. I am excited to have you back. We are talking about why a permanent cash value policy. We're going to be not too long, but we will be strong. Definitely want you to know who I am. If you haven't watched this channel before, I'm Shatika Husser of Husser Financial Solutions, where we help you retire before you expire. So if that's what you desire and what you aspire, then of course we are the ones you hire. Our goal really is to get your bank account on fire with a whole lot of lifetime tax-free retirement income that you will not outlive. Boom. Now the goal really is to help you because you don't know what you don't know, and so our goal is just to expose you to more information that a lot of people are not aware of. I wasn't aware of after serving in the military, serving in corporate, making all kinds of money, but not knowing how money works. And really, how money works is how we're going to talk about it tonight as it relates to permanent cash value policies. Let me ask you a question. Do you know what the steps to financial freedom is? Do you know what the steps to financial freedom is? I'm going to ask over here in TikTok land as well as in Instagram. Could you list the steps to financial freedom? If you can't, I will tell you this. The common denominator for all steps is a life insurance product. And here's why. I want you to think about compounding. Tell me about that. Compounding your money, making money for you while you sleep, like Warren Buffett says. Unless you do that, you will be working for money all the days of your life. And you all know, retire before you expire is my slogan, right? So you will never be able to retire. You will be in the 95 to 97 percentile of people that never retire because they can't. It's one thing to not want to retire because you want to work all your life. And it's another whole thing to say, I can't retire. I got to work. And so that's disheartening. And I want to make sure that we educate you on how you can get in position for that. So the first step is to get financial freedom. But there's several steps even within that one step, right? So we think about the several steps within that one step. The number one thing is to compound your money and make your money make money for you at a faster pace than you can make it by exchanging time for money. Okay, that's number one. Number two, how can you keep more of what you make? Right? So debt, how do you become debt free? You got policies out here that can compound, make money for you while you sleep. You got policies out here that can pay off your debt if they're structured the right way. They got to be structured the right way, though. I can't stress that enough. Your money can make money for you, create greater cash value inside of your policy. Now, the money that your policy makes, you take that money and you go pay off your debt because your debt is probably higher than about 5 to 6%, which is going to be the interest rate that you're going to end up having to pay at the end of the year. If it's anything above that, you definitely, but if you're going to pay that money back within a year, it's not even going to be quite that amount, right? If you're going to not even take that long to pay it back. The goal is to try to get you out of the highest debt. You hear people talk about the snowball effect all the time. Snowball is not the way to go. It's the avalanche, right? Why the avalanche? Because you want to tackle the highest interest debt first and then move on to the next and the next and the next. That's going to get you out of debt faster than just having a feel good paying off the smallest bill amount, right? The smallest bill amount might be, let's say, the interest on that smallest bill amount might be 2% or 5%, but you got a huge 13% interest on this big bill, right? So you need to start chipping away at that big bill before you do the smallest bill so that you can get out of overall debt faster. So the avalanche, research it, but that's the way you want to go. You want to write down all of your expenses, all of your debt, know the interest rate for all of them, because some people don't. And when you figure out what the interest rate is for all of them, tackle the highest interest rate first. You'll find yourself out of debt faster. So debt elimination, not debt consolidation. Debt consolidation is putting a Band-Aid on it. You'll take longer to get out of that. It's just not a good deal. But if you have a policy, you can take that cash value that it's making and pay off that high debt first. Okay, so that's two ways that you can use that to get towards financial freedom. Number three, emergency fund. The wealthy do this very well. Instead of going to take out a high interest loan, high interest credit card, they become the bank. They take it out their whole life policy because whole life policy is a short-term play, right? IUL is the long-term play. IUL is for getting more cash value over a longer period of time for retirement. Whole life is for paying off debt immediately. As soon as that cash value comes, boom, pay that debt off. All right. Or emergency fund, those two things. So we just talked about three things. We talked about compounding, we talked about emergency funds, we talked about debt elimination. All three is what? A permanent cash value policy item that's going to be able to help you with that. All right. Now let's get back to that question I asked you earlier about keeping more money, right? Taxes. All right. So people sleep on taxes, but I'm going to tell you this. Your largest bill is not your debt that you're paying. It's not your mortgage. It is your taxes. You're probably paying thousands of more dollars per year that you probably can eliminate just by having a business, because the tax code wasn't written for the W-2 employee. If you are a W-2 employee, I was one for many years, Army officer, corporate executive, Walmart, as well as Amazon, right? But I'm no longer there. But I paid a lot of taxes. I paid people's salary and taxes. And if I could do it all over again, I would have had a side gig, a side hustle, a side something, okay? Because that's what people are doing that know how money works, okay? But the wonderful thing about a cash value policy is that it's going to grow tax-free. You're not going to have to pay taxes if you have it structured properly and you use it properly. But if you have your money in real estate, stocks, cryptocurrency, all these other things, you will pay capital gains taxes. So the wonderful thing about something like an IUL, which is very high interest, giving, it's going to give you a nice reward in comparison to the other ones, is that you don't lose a penny in it. So you're protected from market volatility. So we start talking about what did Warren Buffett said? He says, rule number 1 and rule number 2 is to never lose money. And people don't understand what he's saying when he says that. He's talking about to never lose money in the market, right? So how do you never lose money in the market? You never lose money by having an index product, rather it's an index universal life policy, rather it's an index annuity. Okay. Let me tell you this. I know people don't understand, but annuities and life insurance are both administered by a carrier. They both are administered by a carrier. But not all life insurance brokers are created equal. They all cannot sell you an annuity. The average life insurance broker can only sell you life insurance. All right. But with an annuity, your money is growing. Index annuity, your money is growing and you don't lose money. Or index universal life, your money is growing and you don't lose any money. So the goal is to be able to only make your money work for you, make money for you while you're sleeping, and never lose a penny. That's why people love index type of products. Okay. If you want to be aggressive and you want high risk, I'm there. I'm with you. I traded. I've done it all. I've done crypto. Listen, I've done it all. So I get it, because I am what you call high risk. Some people have moderate risk. Some people are low risk. I am not low risk. I am not moderate risk. I am aggressive risk all day long. I love annuities. I love IUL because they're going to make the most amount of money for my money as it relates to those types of products. Okay. All right. So we just talked about, and I'm doing a recap. If you're just coming in, we're doing a reset real quick as they do in Clubhouse. Number 1, we talked about was compounding. Okay. Making money for you while you sleep. We talked about number 2, debt elimination and not consolidation, not putting a Band-Aid on it. We talked about number 3, emergency funds, so you don't get into more debt trying to borrow money to be able to pay off some type of emergency. Then number 4, we're talking about right now, keeping your money by making sure you understand how taxes work, getting the best tax professional to do your money for you, help you, right? If you're looking at how much it costs to prepare your taxes, you have to have a mindset shift. Okay. It's about how much thousands of dollars can you save me? Okay. I don't mind paying a one-time fee that's going to be larger in terms of preparing my taxes, because you're going to get me thousands of dollars back. I literally got like 5 figures back one year when I changed from one person doing it to another. So you want to make sure you have the right person paying your taxes, because that money that you can keep, you can now take that money and invest it and make more money. More money babies, all right, inside your policy possibly, right? All right, so those are 4 great ways. And then 5 and 6 is kind of like more, really about preservation. How do you build wealth? How do you make money for you while you're sleeping? It's more about that. And then keeping the tax. It's redoing the same thing over and over and over. But now you're going to do that within your family. You're going to probably have some type of trust. You're probably going to have it structured in a trust. Okay. The only person that you should be listening to be honest with you, about trust is a trust attorney, a estate planning attorney. I mean, I can talk about trust all day long. I know people talk about trust all day long, but you really need to be talking to an estate planning attorney. If you have your wealth team built and you don't have an estate planning attorney, you might want to start trying to find one. And I don't recommend them because I just don't recommend people. But you definitely want to do your due diligence and find yourself a good estate planning attorney. You want to find you a good life insurance broker that knows how to properly structure and design policies. And you want that person to be a non-captive agent. You want them to be a broker and not a captive agent. Let me tell you who are captive agents. And I'm just putting it out there. Captive agents are New York Life, Primerica, State Farm. They can only sell you the products that their company has. They cannot shop 30 A+ rated carriers throughout the nation to find you the best rate. They cannot do it. They can only sell you what they have. If you have a broker, I'm doing broker stuff all day long, and so you want to find yourself a broker that can work with A+ carriers, and they're actually licensed and contracted with these carriers to be able to find the best rate for your situation. Because you have all types of medical challenges that can cost you a lot of money over the lifetime if you don't have the broker that can help you find the best premium for where you are. The goal is to get your policy before your next birthday and at your most healthiest rate. Okay, that's the best thing I can tell you. There's other factors that impact it, of course, like your driving history, your weight, if you're a smoker, besides your health, your driving history. All these types of things can really impact your premium. So, understanding all those things, they can get you with certain carriers. Like I know which carriers, they're more friendly towards smokers versus non-smokers. There's some carriers that's more friendly to people that have diabetes versus not having diabetes, different types of health challenges. So you want to work with a broker to make sure that you're getting the best price. If you're on here typing it in on a Google something, you're doing yourself a disservice. You need to talk to a broker. No matter who it is, it just needs to be a broker that's been doing it for an amount of time, that's been working with various carriers and can get you the best rate. Shop your rate, just like you shop for a mortgage, just like you shop for a car, just like you shop for a husband or wife. Shop your rates, okay? What else? So those are kind of like the steps to financial freedom. We're almost at 15 minutes. What questions do you have before I wrap this thing up today? I kept it real high level, real short and simple. But I really wanted to talk about why a permanent cash value policy, because most people think term is the way to go, invest the rest, but the average person does not know how to invest. And who knows how to invest better than a carrier? That's why there's bank-owned life insurance. That's why there's corporate-owned life insurance, COLI, BOLI, because they know how to invest, or I should say contribute your premiums to the right places to make your money make money for you. Okay. So that's why corporations, that's why you have like Disney World and different multi-billion-dollar companies that haven't gone under, because they decided that they realized that they need to have a reserve somewhere that's going to definitely not lose their money for them. And so that's why carriers are still around. That's been around for many pandemics. Got carriers that's been around for 140 years, 130, 110. They've been around through all of these different economic challenges where, Bitcoin hasn't been, or, these different new age items are. Yeah. So you want to make sure your money could be somewhere that is, you got banks that haven't been around for 10 years or whatever, but, carriers that have been around for multiple, decades. You definitely want to know that, your money's pretty safe there if you're trying to figure out where to put your money. What questions are out there? Stephanie, are you still with me over here? Let's see. We got anybody? Oh, so music joined too. I got all kind of people. All right. So I am going to wrap this up. No questions. I want to make sure I covered the majority of what I needed to cover for why a permanent cash value policy. The other thing about the permanent cash value policies, they have so many what's called riders benefits. So you can add living benefits. So if you have heart attack, cancer, stroke, dementia, your 401k is not going to do that for you. Your Social Security not going to do that for you. Your nothing else will do that, right? Your real estate. So unfortunately, we had, even next door here, young lady's mother had cancer. Well, we just years ago, I remember a young lady had cancer. She needed to pay $80,000 for her cancer formula. And, she would have passed away if she didn't have her policy, because she was able to advance her death benefit to be able to use it and, be able to live. So you want to have something in place to be able to help offset chronic, critical, and terminal illnesses in terms of those bills. Why go into debt with your retirement plan when you can leverage your death benefit to be able to use those types of things for, right? So you can have people have multiple policies. You don't have to have just one, right? So you can have multiple policies. I know there's people out here with 15 policies, one for each house. It's just different goals for each policy. Rather, it's the debt elimination or emergency fund or retirement income or whatever. They all have different purposes, right? So just know going into the policy, what is your plan? What is your vision? That should be the number one question that your broker should be asking you. And then behind that, what is your budget, right? We never want you to get into something that you cannot afford. That is not good for anybody, right? That's not good for the broker. That's not good for the carrier. That's not good for the client, okay? We want you to get into something that you can afford. So the budget is why the first thing they should be doing is asking you to fill out a form, which is called like a needs analysis, something of that sort, where they start doing an analysis of what your financials look like before they even get you into any type of product, so that they can know whether or not it's in your best interest and it's more suitable for you. If not, they're doing you a disservice. I'm just going to say it like it is, and no matter who they are. Hi, Ada. So that's really what they should be doing. So again, living benefits, emergency fund, compounding your money while you're sleeping, definitely having a death benefit. The list goes on, but I think that the heavy hitters for most people today is, how do I pay off my debt? How do I structure this policy to pay off all of my debt, no matter what the debt amount is, rather student loans, rather it's mortgage. I can pay it off in 7 to 9 years. So I'm going to structure it inside this policy to be able to do just that. Normally, when you have people talk about debt elimination, they're really talking about a life insurance policy. Let's be clear. Okay. So that's one of the most attractive things right now with the debt being as high as it is for most people, but really inflation, right? So again, if you have a huge amount of money inside your bank account, and I know people that do that, and it doesn't make sense to me, because you want your money to be making money for you while you sleep. If not, you're getting poorer every day, right? You're getting poorer every day if inflation is 8% and your bank account is making you 0.00003%. You're getting poorer every single day, right? So it's a very, very important that you understand, how can I compete with inflation, whatever inflation is. All right. And so an IUL long-term is going to be the best product around, historically speaking. Past results don't equal future results, but historically speaking, it has outperformed whole life policy, okay, all day long. All right. But a whole life policy, you can access your cash from emergency fund and paying off debt faster than you can an IUL, because an IUL is fee heavy in the beginning years, and it has a surrender charge in the first 10 years. So people can't use that to pay off debt, because you don't have access to all your cash value the first 10 years. So that's why whole life is more attractive, even though it's slower in its growth. Okay. Slower in growth, but more access to all of your cash value. All right. So we are done. I always go over, but hey, it is what it is. If you have any questions, you can reach out. Definitely want you to go to shatika.com, download your free retirement planning guide. We're going to have some nice digital products to be able to offer you by the end of this month, because it's overdue. So any questions? Hey. All right. I'll talk to you later. I'm jumping off too. Enjoy your evening. Go ahead and end this broadcast. Again, Shatika Hustle with Hustle Financial Solutions, where we help you retire before you expire. If that's what you desire and what you aspire, then we are the ones you hire. Our goal really is to get your bank account on fire with a whole lot of lifetime tax-free retirement income, just like Social Security, that you designed because you had your older self in mind. God bless you. Have a good night. We're out.